Hey, Steve and Andy, what's up?
Hey, thank you, Scott. Happy Tuesday, Andy. It's Tuesday again.
Yes, it is
Yes.
that. Hello, Scott. Hello, everybody.
All right. Yeah. Moderate crowd. I think we're feeling the July summer doldrums here and market participation volume, which also would manifest in webinar participation. But I know people will trickle in because they know I'm about to spend the next 5 minutes on these couple slides here. So the usuals are probably taking their time. The reminder that the trade of the week is it's content, and we're content providers. We're also a software as a service subscription, and everything you see in here today in this webinar is opinions on myself and Andy, and it's content we're giving and sharing with you guys, but it's not to be construed as serious financial advice. That is something that comes from the fiduciary responsibility guide that take all the tests and charge you the fees. They're the ones that can give you official financial advice. So we've been around for 14, 15 years almost now, and it's a very robust product with many layers of understanding. That's something you can learn in 5 days or less, and so we recognize that and have a lot of ways in which we can get people up to speed quickly. The first being Barry's live trading room from bell to bell every week, Monday through Friday, as long as the market's open and it's not too slow at the end of the day. He will be in there answering questions along with a few hundred good traders, well, a few hundred people nonetheless, a lot of people learning, but a handful of good traders, I meant to say, that are really good, and they kind of take the lead sometimes and help the community and the room focus on where the action is each day. And Barry, of course, shares his desktop and, of course, trade ideas, technical support, and help with anybody who asks, and he's very generous with his time. And then we have the afternoon webinars, such as now. They all start at 5 Eastern, Monday through Thursday. Different kind of format. Same format for the most part, but different speakers each week. Wednesday, the format is Dan and Brad talking a lot about what's happening and coming down the pike with new versions, where the vision of the product is going. And then Friday, we don't have any support sessions. We don't have any Trade Ideas University, which I'll talk about in a second. We have what's called a Friday support session for 3 hours, 11 to 2 Eastern. We open up the go-to webinar just like now, share our desktops. All 4 of us are in there, the traders, and we answer questions, trading related, scanning related, market related, whatever you want. It's open mic, so to speak, on those Fridays. So we reserve that for Fridays. And then TA University, lastly, is a recurring class Monday through Thursdays during the market, noon Eastern. It goes for about an hour, hour and 20 maybe, depending on the content, and we ask for questions as well. So restarts every Monday, and every Monday you can jump right into the front of the line, start with the basic info, and go right into the Thursday class with more advanced stuff. It's a really good crash course on how to get the most out of this program. So that's it for the pre-canned slides. As usual, we come to our theme for the trade of the week. We use the Trade Ideas platform, whether it's AI or even custom filters, to bring us the technology that we want to see curated. And from there, we, the human being, make the discretionary decision as to what to do. And that's a reminder of Paul Tudor Jones, one of the greatest traders out there. Matter of fact, he's got a great call going on about 2 months ago. He said, get long gold. And I've got a couple thoughts actually on silver we'll touch on for a moment. But the whole point is, this is not a program to just turn on and have it make money for you. You're delusional if you think that. It requires man hours, human hours, female hours, what have you, what pronoun you want to choose. The trader has to put some investment in this, and it requires seat time and visual time. You know, Andy and myself probably have 30,000 hours each looking at charts, and so much different when we look at something versus a brand new person. So we don't want the new person to come in and figure that this technology will take care of everything for them and make them money and deposits into the bank. It requires a lot of human discretion as well. But the program, the beautiful part about it is it's here to curate the stuff and filter out the noise and filter out the junk and show us what we're looking for. Whether you're a trader who knows what you're scanning for and you've built your own scan, or you're a newer trader and you kind of want to see what Holly is spitting out as a AI, artificial intelligence that doesn't have emotions and only is going to trigger something unless it is statistically probable. So it's a learning tool in itself. Many times we try to remind people. So here we are today. What a bull market. Market recap, I'll talk about that. I have some observations. Andy has some observations on Holly. Trade of the week, that shouldn't be TNA, that should be IWM, my bad. I will fix that. Matter of fact, I'm going to fix that right now, and I'll explain why that's not the case. The trade of the week is IWM. TWA is a triple, and we'll talk about that when we get to that section. And then back testing last week, just wanted to kind of revisit, you know, we did a really cool swing test, swing method of swing trading, an alert, I should say, that back tested really well for like a 2 or 3 day hold. And it's so important when we have those methods that are back testing well to stay on top of them, not put them back on the shelf and assume they're going to work for 5 years. They can disappear real quickly when the market action changes, and so it's going to be a lesson to remind us how to stay on top of the stuff and make sure they are still giving us the data that we're looking for. And we'll set some alerts and look at the alerts that were set last week as well. Just kind of keep on rolling like we were doing with those alerts that we set from this the A-table scan here. Some people might notice my layout has changed a little bit. Andy might talk on it as well, but the Holly is moving back to a single segment Holly. So I no longer have 3 segments of the AI on here. If I go and right click the segments, you can see they are all. So at the end of the day, we get everything in one window, during the day in one window. So what that's done is that's freed my desk space up for a little bit of stuff that I personally like to use a little bit more, which of course is the A-table that we've been setting alerts on each week. This is the I'll Take That. This is the one that we back tested, and we'll play with it again this afternoon, and a couple of others that I like. But getting into the format now, as promised, I see a few more people trickling in. We're going to talk about market recap. I know a lot of people were in Jamie's room yesterday. Really not a whole lot different than what Jamie said. So actually I'm going to do the same thing here that I did in Jamie's room. You might like this, Andy. Let's see here. If I can just find the right time. There we go. So here was the S&P last Monday, and we talked about the significance of pivot points. This orange line is the prior high back here, and many times price action likes to return to the scene of the crime just to put its stamp on it and in fact prove that it was a significant level of pivot. So what we talked about was a little bit of a pullback, and we didn't want to see the price come back much lower than that orange pivot line. And I'll go ahead and fast forward there. There's that green line last Tuesday, and a perfect spot for which the market to build a higher high. We talked about that being a base and that being our next base. We were supposed to get rid of that. This is how this should be looking. So as long as we're building higher highs, it made perfect sense that we broke out to all-time highs here in these areas, and then immediately, like this market likes to do, 3 steps forward, 2 steps back, but perfectly aligned, not only on the pivot line, but look at that. The 10-period moving average was right there. Also, gap fill was in order there as well. So it made perfect sense for the price action to just kick back and use this level as a springboard for a higher low. And then we also, last week, you might recall, Andy and I talked about the possibilities of summer market action can easily turn into low volume, kind of lackluster grind higher. No real selling in sight, no real fear, no real volatility. But we've seen it, you know, we've been around many summers, and there's been a lot of summers that have given us this slow grind higher trains leaving the station and doesn't really want to give us big deep pullbacks. And so what I said yesterday in Jimmy's room is the pullbacks that I would like and expect to see are the pullbacks that are going to come back and test this rising 10-period moving average. It could be quite possible that we ride this 10-period moving average for a couple of weeks. I don't know. I'm just saying that because I've seen it in the past where lackluster July and August summer markets with lack of participation just kind of have a gravity of the 401ks, if you will, just slowly seeping their way into the market onto the buy side. There's no bear case to be made. Certainly have to say that. We look at this market here, there's absolutely no bear case to be made whatsoever. Price is above the 10, 10's above the 20, 20 above the 50, above the 200. Everything's perfectly fanned out. Everything is perfectly set up here for continued movement. Now, we don't know of any black swan that could come out of the woodwork and take us all down, any unforeseen type of news that's out there that nobody accounted for. So barring that and that not happening, we could just see a lot of this action right here. Narrow range days, kind of throw the elbows to the upside, spend the rest of the day going to the downside and then finishing up. And at the end of the day, we got a net change. Well, it didn't happen today, and I'm glad it didn't happen today. We've had 5 up days net change. We had to give a little bit back. So maybe tomorrow, all things being perfect, we come in here and maybe put a little wick down there on the open of that 10-day moving average, and we set up to build another higher low. I'm not trying to predict it. I'm just saying there's a good possibility that could happen, barring any, of course, unforeseen news. I'll let you come back to the spiders. I'll just finish my thought here on the Q. NASDAQ technology leading us higher. That's the prior highs back there. Therefore, maybe we see the same thing come back and do-si-do and dip its toe back here on this pivot line, which is an all-time high like the S&Ps did. The Dow, the industrials are looking great. They didn't even give much pullback today. It's one of the better looking charts of all. Really, really looking nice. And again, I start to get a little nervous when I see this much space in here between that moving average and the price. That's just it's just begging for a 3 steps forward, 2 steps back, kind of a pause back to that line. And then we'll finish with, of course, the IWM, which is going to be overlap because the IWM is actually the trade of the week. And the thought behind it is, without too much overlap, is, this was the prior high back here. And if this market's going to continue to grind higher and there's no bear case in sight, the value players that are managing billions of dollars are going to start being silly if they don't give this a good look, meaning the small cap stocks might be ready for a big move. And there might be a lot of alpha to be achieved in this space here. All the other moving averages are up there. All the other indexes are up there at their respective all-time highs. But what is wrong with this guy? Well, the way it's looking, it doesn't look that bad. We got the moving averages fanning out now. Great. We've got nice sideways action, wicking back and forth. For the moment, it's not letting the 20-day moving average break, but we'll keep an eye on that. I really think there's something to be had on this. And I'll save the rest of the talk for when we get to that section on the trade of the week. So IWM's playing lagger. Maybe the buyers jump in there and try and find some value plays in the next couple of weeks. We'll see. Anything you wanted to add, Andy?
No, I agree with everything you said. I will say this. I think one of the reasons why we're maybe seeing a pause and a slight pullback in the other major averages is because they're like saying, calling the little brother to come along, and he's not. So,
Right.
So they're pulling back a little bit. Yeah.
Who's going to win? Which reminds me, you said the word pause, P-A-U-S-E, but that brings me to P-A-A-S, which was a big mover today. And this is kind of, look at that volume. Beautiful shape. This is what IWM is looking like right now, guys. I mean, come on. Let's see here. Let's zoom in a little bit better. We can get that. Here's IWM right there. It's just waiting to do that, I hope. So my point is, silver, I think, is playing catch up here, guys. I mentioned gold, GLD, the commodity. It's been having a real good, Paul Tudor Jones was calling it right back here. And obviously people probably paid attention. What's gold doing? Jeez, gold's looking like it's setting up again. Nice flag right there and respecting the 20-day moving average. That thing takes off. There is no way in hell that silver will not be paying attention. So silver is doing kind of what we're asking IWM to do. Look for the value plays, the people that realize gold is now starting to make a move. Silver can be the poor man's gold, as they used to call it. And so I'm not surprised the last 3 days of vigorous movement we've seen. And then the main mining company that I like to look at for silver is showing beautiful technical strength. When was the last time this thing closed that strongly above?
Exactly. Nice volume, everything.
Average. Volume was incredible all day long. 3.0 relative volume all day long. There was just a beauty. Let's take a look at one more thing before I go. And yeah, just kind of as I thought, the old 10-period moving average works in wonders in the intraday too, and then it got a little sloppy at the close. But if you're somebody who's trading this intraday and you're watching this level right here, there was no reason to get out and look for at least a little bit more push to the high side. So that is the market recap with a little special emphasis on gold and silver. I think they're going to continue to do well. Roku had another big candle too. So yeah, speaking of charts that look like that, nice sideways action, and boom, it had its day. Now that it had its day, I wouldn't be surprised to see Roku, and go on record as saying this, I wouldn't be surprised to see Roku follow through tomorrow, and then as you get into the lunch hour, they start to give it back as the short-term traders start to look for the exits to take profits. When you get these moves on the daily chart, whether it's pause, I'll say the same thing tomorrow for pause. Pause might have a little follow-through into the lunch hour and then a reversal. So sometimes we talk about a day and a half. A day and a half is what I'm talking about. When you get that big move, green candle out of the break, big volume, there's going to be follow-through tomorrow. I'm pretty certain of that. I just don't know when it's going to dry up.
Or it could be an inside narrow range, and then a go pause go.
The go pause go is always a possibility too. Those are usually the two scenarios after a big day. It's like the next day is like, wait a minute, what just happened here? And then the buyers and sellers fight it out in a narrow range, and then the third day determines who the battle is going to be won.
Yep.
All right, so that's all I've got over here. If you want to take it and talk about some of the stuff that happened in Holly today, we can do that.
All right, I sure will. All right, you got eyes on me? Not a lot to talk about today, guys. I will say this. I'm going to go over some few things. I want to talk more about that risk. I mean, the profitable trades only. I've been keeping mine on that, and I tell you, it works wonders. It keeps you away. Not only does it keep you away from bad trades, it doesn't muddle your blotter here, so you're seeing, you know, so much. And like I said, a lot of these things will just take your attention away from good trades. So, been using it. I'm basically just keeping mine on all the time on profitable trades, because if something goes negative and pops back up and goes positive, it's going to appear on here. But what I don't want to do is start trying to, you know, trades that aren't working, trying to find spots where they're going to bounce. They just may be, you know, ugly and red all day. So I'm liking it. Let me first go back to the all the trades today and just kind of give you a breakdown. Here's our spiders. We always like to look at our spiders to see what Holly had to work with today, because she does exit all trades by the end of the day. And you can see there, as far as the spiders go, we opened up a little bit down and really never got positive. We may have ticked positive right here, and then just, you know, pretty much just kind of a sloppy grind all day. Not a huge sell-off, just geez, basically 0.4%, you know, percent. So nothing major at all. But nonetheless, if you look at the blotter here, I can show you, and yes, I can use this too, Steve. Look at our lower level down here. All these red numbers. Yeah, you like that? And then look what we have at the top part. Okay, what's that? 6 trades. 4 of the top winners were all shorts. Okay, so it did. And if you looked at risk, full risk or risk on, you're going to see there was some other, you know, values here that this Fox A, if I click on there real quick, you're going to see that was really a decent trade there, decent entry, never really, you know, not a whole lot of pain, just slopping back and forth, and it finally sold off. So, you know, is not like nothing to write home about, but you can see, even if I go and I put it on long strategies only, you're going to see it's pretty ugly. And then if I go and got to learn to use a trash can though, Steve. If I go and put it on short strategies, you're going to see that was more than most of the profit was today. So that's another great tool, guys, when it comes to this drop down box. Okay, and I think the long and short may have been in there previously. I can't remember, Steve, but you know, if you have a day in the market where we're pretty much opening up and selling off all day with some minor bounces in between, you're going to see in here that that you'll see the reason why the short strategies basically outperformed the long strategies. But once again, you can see the final numbers over here. Nothing to write home about. But getting back, guys, to profitable trades. Okay, I'm gonna give you another little pointer here. Okay, not only are you not seeing all these different symbols coming through your thing that are down the day and not working, it will help you focus on the ones that are working. Okay, and it'll help you, because a lot of these ones will pop in here and they will never leave. Great example right here is INVA. Okay, this was a beautiful one. Okay, now I'm going to show you 2 different, because I've talked about this before. I want you to look at this chart, and I'm going to show you a reason why you might want to take this versus, and this is the kind of logic, guys, when you looking at these trades. CMC triggered same topping formation right here, and look what happened. First of all, it was only green briefly and then disappeared from your screen if you have it on profitable trades only. So you're not fighting this because you're not in it. But what is this? Commercial metals. This is a steel. Steel was one of the strongest sectors on the board, along with silver, I guess. X was having a good, all the steels were having a good day. So if you know that, if you're looking at your sector watch list and you're seeing steel and it was at the top of the list for a good portion of the day, and you see a short triggered on this type of chart, I mean, don't fight that. That's a beautiful looking setup there. Now, Holly plays statistics. Okay, she may not know this is a steel sector. Okay, she's not that sophisticated as she gets better and better and better. But this is one where human with machine, human looking at the sector watch list and looking at the chart saying, you know what, I made this leave this one alone. Now let's take a look at INVA. Okay, now look at this chart compared to what you just looked at in CMC. And I know this is hindsight, guys, but still, your odds are much better in this situation. Looking at this chart right here, okay, which hasn't made a bullish move in months, and except maybe for this one day back here. This to me is a much better risk reward trade than CMC. Okay, so, and this was a beauty. I mean, you talk about a no pain trade. You got your trigger there, and even if you didn't take it right on off the bat and you watched it for 15 minutes, you would see it break this level right here and look at the continuation. Now remember, this thing was charging up as the market was rolling over, and then you run into major moving averages right here, and not only that, you have a resistance level right here going back to this high. Just trying to help you out with maybe logic when you're looking at some of these trades, okay, and which ones to trade. First of all, if you have it on profitable trades only, you would probably have saw that CMC for maybe 2 or 3 minutes. And if you had, you would have seen this ENVA, it never would have left. So even if you, let me put it on a 5-minute just to kind of help you out here. Even if you held this trade for, let's say, trigger 5, 10, 15, 20 minutes and it broke this level right here, look at that extra juice you had in this thing. Just a beautiful setup right there. And another reason why, if you just keep it on profitable trades, you're going to see this. Here's another one. This is a long actually, but once again, put it back on 15-minute. I like that one better. No pain. Well, I should say that, a little bit of pain, maybe 7-8 cents below, but there's your trigger. No, here it is. Yeah, there's your trigger, a little bit below, and then pops up. Okay. Was this the one I was wanting to look at? Hold on just a minute here. Seemed like that's a better one. This DX right here. Yeah, not really. I mean, it was always above, never, no pain, but really look at that. You got 6 cents out of that. I'm sorry, 10 cents. So that one, it's not as pretty as it appears on the chart. But just looking at these 2 examples, or 3 examples, INVA, okay, no pain. You could have been patient and wait in 15 minutes as it stayed on your board profitable pretty much all day. WEC, same thing, you know, and this is one that you could have, you know, watched for maybe 15, 20 minutes and seeing it set up, seeing it stay on your blotter here, maybe dip down for a little bit right there and then pop back up through. So even if you did grab it right here, you had some nice little alpha of it there going forward. But today's not a great day because all in all, it was kind of, you know, ho-hum day for Holly, but I'm just trying to show you examples, guys, of how it will benefit you to keep on profitable trades. Stay on profitable trades, and that way you're not looking at some of those dogs, okay? And you know, I hate to say it, but sometimes Holly doesn't call a good trade. We know in the long run, over at time in averages, more trades are going to be, you know, she's going to out, or I shouldn't say she's going to, she has beaten since 2016, the S&P. So we know the trades are there. So why not follow the ones that are working? All right, Steve, I think that's about it.
Yep. All right. Send it back.
Send it back.
Over. All right, very good. So what we'll do now at this portion is move into the trade of the week. Actually, last week's trade of the week is on the board here. I was just looking at it. And if we recall, the trade of the week was, you know, it was kind of a funny one because the actual trigger was right there, but a few people that caught the Monday webinar last week, Waleed and a few others, noticed that we had another day of data in here. So personally, I said I wouldn't be surprised if I wouldn't blame people for using that as a buy trigger. Well, nonetheless, that general area as we speak was in fact what we hoped it would be, a higher low. And if we can find those higher lows and dig into them and take a position into them and let them dig in and move up and out of them, well, then maybe once they clear this level up here, it's time to start maybe taking some prices as it clears this level, because you're just trying to really play the channel here, okay? So we bought the low end of that Xilinx channel, and if you got into it down here at the right spot, you don't want to be complacent. You'd probably like to get out here on the upper end of that channel. So yeah, Waleed followed my advice last Tuesday and got a better entry, because the next day it actually gave us a better entry than was published, but can't do anything about that because we had another day's worth of data after the email went out. So this week it brings us to IWM. I think, again, we'll just rehash. That's a beautiful looking chart. I mean, look at what we saw pause do out of something. That little coiled spring came out of there like that. Roku even had, came out of a nice coiled spring. If I can't spell. Not as coiled, but for the most part, IWM has a lot of catch up to play. And so we're just going to bide our time here. We're just going to wait. Basically, the trigger line is already being drawn for us by the Trade Ideas technology. The high end of that color band, the blue section, is basically keying off the same trigger that we talked about. So Trade Ideas technology is seeing it. We're seeing it. It's been 2 days since it was called. The price hasn't attempted to blast through there, but I think if it does, really think there could be some momentum and some follow through behind it.
Mm-hmm.
Yeah.
No, I was going to say, if you see a close somewhere close to that high, the trigger, yeah, I can see this can be setting up for a big gap, at some point.
Big bottoming tail, and then it closes right under the trigger. Yeah. Go ahead and buy that close, guys, because you're going to be chasing this.
Yep.
All right.
And what happens is it gaps up 3%. You're like, oh man, I'm not going to chase
that. And then it's up 8%, and you're like, why didn't I chase it? 3%. So they're going to make you pay up for it. So sometimes if you see really good setups going right into the close, and a lot of times they'll have a nice bottoming tail on it with a nice close near highs, and it's like, boy, they faked everybody out today. Tomorrow's the move. Well, if you wait for the opening bell to ring, you might be chasing hard, and you don't want to do that. So we used to take positions all the time when we were managing that swing trading portfolio, just to tell people, don't be alarmed. We're taking a position at the end of the day. We're doing it by design. We're not waiting for a trigger.
See that all the time, yeah.
Anticipation, the anticipation trade of the gap and go. Okay, so back to IWM. I mean, again, the thought being, if the market's going to continue to grind higher, at some point, it's going to break out in the value. Players are going to look for it, but we're not going to be interested in this at all until it breaks through our levels. So there's not a whole lot to talk about here. We're not active. I'd love to see it tomorrow go and maybe have a great day tomorrow. And let me add this, guys. If there's a day where the IWM is blasting and you like to play small cap stocks, turn off every other alert you have and only focus on the small cap stocks, because when the market has its day with small caps, they're going off left and right like popcorn everywhere. Andy knows what I'm talking about. So when the market has its small cap day, close every other big cap window and just focus on the small caps, because they're very few and far between. But when they happen, you got to figure fund managers are just scraping left and right. Fear of missing out is huge, and they're throwing big money at small stocks, and you get some really good moves when that happens. So when this day does come, if it comes, maybe it doesn't. Maybe I'm just sitting here and we're going to have some horrible black swan tomorrow.
Well, obviously, it's exhibiting relative weakness now. We're just saying, if the markets are going to keep going higher, it's going to have to drag. I mean, you would think it's going to have to drag.
You would think it's going to drag higher. But on the day when we do break above this, pay attention to other trades that are small caps, because they might be popping left and right like popcorn. Lastly, the TNA is a vehicle from which you could trade this alert, but I don't recommend buying TNA and holding it overnight, because you get the overnight decay the way these triples work. But for a day and a half move or a 2 or 3 day move, nothing wrong with using these triples for amplifying the move that you're riding, the wave that you're riding. So,
but do keep in mind that if something happens, a macro event, and that you get a 3% gap down in the IWM, this is going to gap down 9%. So yeah, it can cut both ways. Yep.
Volatility hurts both ways. So, there we go. This was not really garnered either from any major scan. We didn't find anything sticking out on scans. It's just been a theme that we've been talking about the last 2 weeks, and so it's really shaping up, and it's pretty much a discretionary call here in this IWM. All right, so where I want to move to next is, for those that were with us last week, we had this alert called I'll Take That. It looks for stocks that are, in a nice uptrend here on the daily, but had a big falling. And typically, these are going to alert us as they fall back to that moving average, that 10 period roughly. It's not a perfect science. There's a lot of slippage and slop in here. But for the most part, we found last week that these types of trades work really well for swing trade holding. All right, so what I want to do is I want to pull it off the shelf. Let's rerun it again a week later and see if there's any decay in the great numbers that we got last week. And if not, then we know we've got some confidence that we can continue to maybe trust something like this to hold for a 2 or 3 day swing trade. So we'll go into back test. Not going to spend too much time on it. Remember, I think 7:30, 1 hour after the open was the sweet spot for trades. And timed exit tomorrow plus 2 days, so 3 day hold. Risk management, well, let's enable that profit target, 6% profit target. We didn't have that enabled. And then what I'm doing here is I'm sliding it back down from 60 days down to 30. So I'm just going to capture the last 30 days. Remember, probably a week of those, 5 or 6 days of those will be brand new data. So we can kind of just focus on the front end of this method here. And then that's it. I'm going to go ahead and simulate buy. We're testing for a 2 or 3 day hold. And we're hoping that the numbers are staying strong and maybe even improving. Looks like they're improving. The tail end here is still going up. Beautiful profit factor of 4.0, 3.99. And this is the best that Andy's gonna like. Andy's gonna love this. Average winner, $1.69 on the swing trade. Average loser, 56 cents. So that's a beautiful spread between winners and losers. So I'm happy to say and safe to say total trades 37. We sampled 30 days. We're still doing about a trade a day on the average if you break it down that way. And it seems to be, looking at the data here in the most recent run, this thing's still working. And I'm not surprised that it's still working because the market is in an uptrend, and this type of strategy is looking to exploit pullbacks on those uptrends. When everybody else is freaking out and selling on the open, we're being alerted to a possible entry. Somebody else's pain can become our gain. So looks like that's pretty good.
Steve made a great point there. This is a strategy that's working in this uptrend. Keep that in mind, okay? Because if we do, maybe break the fast line on the 10-period moving average on the daily and the spiders, and you might want to avoid, because it is a contrarian play, and those stocks could keep going down. So,
always the backdrop of the market takes first.
Exactly.
So I will drop this alert cloud link for the alert, a swing alert, because I'm sure somebody's going to ask for it. I'll paste that in the chat window. All right, that's in the chat window now. Somebody wants the, this particular scan that we just held for 3 day holds and back tested, and looks like it's doing okay. But be careful if the market does turn. All right, so that brings us to kind of the last segment, which is the setting alerts. I've got a list of alerts I want to look at, but we're first going to look at last week's. And there's a bit of a pattern here. I think the pattern of the 3 steps forward, 2 steps back is really going to be obvious here when I do this. Where'd you go? There we go, price alerts. So let's look at them. Pro triggered last week. 3 days forward, 2 steps back. That one had some alpha. Shake Shack triggered day and a half, decent alpha, then pulled back to today. So what you're going to see here, guys, is trying to stay in some of these trades longer than 3 days is just almost impossible. It's just how the market moves. But the good point is these ideas did generate some greenness, at least in the first few days. Same thing there. 3 steps forward, a step back. Now this one triggered, but this is unusual. It triggered and it's gone nowhere since. And since it's gone nowhere since, I still like it. So it's actually part of my new list. We'll come back to that and rework that one. Wing, even Wing is negative today. It gave us a day and a half of push back here. So all of these, maybe except Newmont. Let's see. Newmont barely gave us any and then kind of rolled back over. But for the most part, you were green in all of these things the first couple of days. Coup, interestingly enough, if you recall, we tried to do a pullback entry and get tricky, and the line was below the signal candle, but we came close this day, but never came close to coming back and tagging it. So our pullback candle didn't trigger. Well, that's okay. So we're going to delete these, and we're going to put up another 7 or 8, I think, depending on how many. First one I'm going to start with was not on the A table scan, but the rest of them are. I'm just going to throw this in there. It was one I was watching and participating in today's IMAX. I just like this trend change looking kind of a thing here. It's really interesting. Now I'm going to put in the notes, I'm going to call this kind of a move day. Tomorrow, if it gets a move up here to this 50 or 100, it might just be a decent day trade because 3 steps forward, 2 steps back could hurt us on a late entry like this. So I'm going to call it a late entry and maybe only good for a day. So 88 cents is what I want. And the notes are going to say maybe a single day hold under 50 SMA. All right, now the rest of these are going to be coming from the A table scan, which of course the ebook is on. If you don't have the ebook, Scott will tell you how to get it. And I might want some help with some of these entry figures here. AYX, this thing's just kind of chopping sideways. What I was thinking I'm going to do here is I'm seeing kind of a wedge being built, and when I see a wedge being built, I don't wait for the absolute high. I'd like to get kind of a high in the middle here, so I'm going to use that green candle. And that green candle's high is yesterday 70 cents. So we'll go to 71 cents. And I'm just going to call this what it is, wedge break from the A table. That one's set. SEDG, and again, these are all coming from that A table scan. Another kind of a wedge, what I'm seeing here. So when I see a wedge like that, I'm gonna isolate this candle right here. 73 cents. Wedge break. SRPT is one. And this one kind of had its move and look. It peaked its head up and then retracted, but it's still being held up here by the 10-period moving average. It might mess around for another day or two and kind of create a little cup and handle. This one's going to have to be the all-time high of this candle right there, 158.81. We're going to call it. This is also from the A table. Now run, we looked at earlier, run was deleted, but we're going to mark it back up. And where we're going to mark it is, I think we're going to have to go to the all-time. What do you think, Andy? Back to all-time.
Yeah, that's a tough one. Yeah, because you almost have to go to either today's high or all-time high. Yeah. Yep,
2068, and they're pretty close, so we'll just leave it at that. XNCR is also on the one. Very nice looking, and look at how the moving average is just supporting that price action there, guys. And I also kind of see more or less of a wedge break here too. So we're going to focus on this. Let's see. I'm going to focus on this candle right there. 2-day head start. That's 82. We got close to that today. We'll go 83. Okay, price alert at 83. This has also been riding that 10-period moving average, so if it wants to push, we'll participate. And how many is that? 1, 2, 3, 4, 5. The last one kind of popped in towards the end of the day, or at least I saw it. ZS. It's like the way that's just holding up there. Honestly, I've never heard of it. It's done 1.6 million shares today. It's got enough volume. It's given us that that wedge break look. Let's go ahead and find a signal candle. Not that one, not that one. Ooh, I'm gonna go back through today's highs. Today was pretty high up there, so I'm gonna use today's high, 66. All right, so there is our 7. 1, 2, 3, 4, 5, 6, 7. Let me go ahead and share these out. I think somebody wanted to look at Micron a minute ago, so we can take a look at that before we head out. Bring Scott back in. Share 7 alerts. Copy. These alerts will trigger for us all at the same time if you download them and put them into your.
Was IMAX from a scan, Steve? Waleed's asking, where's it from?
No, IMAX was. I don't know where. I'm going to be honest. I really don't know where I saw it. It might have been like a trend change type of scan, but it didn't have a big short interest, so it wouldn't have been on mine. I might have just stole it from somebody on Twitter and pulled it up and looked at it. That happens. Nothing wrong with that.
No, nothing wrong with that at all.
Yeah. So, I mean, people on Twitter I follow at least know what they're talking about, so they're showing good stuff to start with.
Yeah,
all right, so let's look at Micron before we head on out. Who asked about this? Oh, yes, Jeff says, ENPH off your A-list last week was a great bounce today, also good. What you don't realize is if you pull up that ebook, ENPH was talked about way back here, so it's been shining brightly for everybody that bought the book back here and started following that one. But thanks for catching that, Jeff. IMAX, we got that one. Kramer loves ZS, huh? Interesting. Who asked about MU? Lena. Hi, Lena. Lena asked about MU. We'll take a look at MU. and then we might head out of here. And if somebody else has another chart or two they want to look at, we can go ahead and do that for a couple minutes. But we're kind of towards the end of our content here. So Micron being a good semiconductor stock, we can see, Lena, why it ran into issues here recently, because it had issues at the same price back here in March and April. So the good news is it probably will pull back and dig in. What I'm seeing is a perfect possible gap fill right there. If we can just send in one more day of selling, maybe put a bottoming wick in, that might be a very interesting buy point for a possible assault on that orange line, because they expended a lot of energy getting to that orange line. We need to pull it back, fill a gap, give the troops a fresh hot meal and a warm shower, and maybe they have the strength to push back through and make a new higher low. Not a bad looking chart there. Somebody's asking about BP and then KIM, and then we'll head on out. BP looks horrible. Looks really, really horrible, and it closed horrible too. I mean, it could have easily threatened this level back here, popped down, and then closed back up in the range, running stops, but it didn't. It closed below that key level. Really looks under pressure. If you're long and you're hoping, I would be very careful. If you're short and greedy, it's looking good. KIM, just $19 stock, kind of in no man's land here, really, between the ranges of down here and up there. Not much I really am seeing. It's just kind of in the middle of the range there, and it's not being supported by its moving averages. It's a big mess here in this moving average, so I just kind of see a tangled mess there, unfortunately. I saw one more snuck in before Scott comes in, and that was KKR. Was on the I'll take that scan. Any good is the full question. All right. Peaked out above the high yesterday. Big red candle today. Closing below the moving average. I would just watch it tomorrow and see how it opens tomorrow. Because tomorrow could give us a little bit of maybe a washout on the open, and if we bounce right back, if you see tomorrow a big sell on the open and then it bounces right back quickly, that might be it, and that could sometimes be the signal that I like to see that the pullback has been complete. They usually finish that pullback with a bit of a washout of volatility and running over the stops. So that could happen. I don't think it's a perfect buy point right here, but it could be interesting tomorrow to keep on your watch list. The other thing I do see, I'll mark it up. The reason it might have stopped right there is a complete pivot point. You see how this was resistance for 4 days back here? Well, that level might be acting as support tomorrow. So keep an eye on that tomorrow to see how it plays out. All right, Scott, that's all I've got. So if you want to come in and talk about a few announcements, now's the time.
Yeah, that sounds good. Thank you. A couple items on the way out. Many of you already know, but some of you might not, that we have a podcast we put out most Fridays. You can stay tuned for that by searching for Trade Ideas Podcast wherever you listen to podcasts and adding us as a subscription. You can also search through and take a look at the back issues. There are some that we have interviews with other professional investors. They're quite illuminating. It's good stuff sometimes. We've got new ebooks out. Some of you might have them, some of you might not, and they're free, so no reason not to try them out. Andy and Steve both contributed chapters. Each book has 2 chapters. We've got them organized by topic. So some are about swing trading, some about active investing, some about managing range breaks and pullbacks. So just go to trade-ideas.com/setup, put in your email address to get taken to the download page, and also have the downloads delivered to your email, and enjoy. Keep them on your desktop. There's good stuff in there. We've got a code this month, July Highs. It's case sensitive, so use all caps, and it takes 15% off your first month or year of Trade Ideas. Those of you that are standard subscribers could also use this to do an upgrade. Keep that in mind if you decide to come on the premium plan. Any questions, email us info@trade-ideas.com. That's the best place to send all your emails, because it gets put into our help desk software that lets us route it to the appropriate team member and make sure nothing gets lost. You can follow Steve on Twitter @TodayTrader. Also follow @TradeIdeas, and we're Trade Ideas Pro on Facebook if you are on the Facebook and want to follow us and share our stuff with your friends. Thank you, Steve. Thank you, Andy. And thank you, everyone, for attending. Have a good one.
See you next time.
Thanks, everybody. I'll see you on Thursday.